Hey everyone, this is Charlie Shrem, and you're listening to Untold Stories. This is a show where we dive deep into the lives and personal histories of some of crypto's most influential leaders and find out how the crypto movement truly came to be. Let's dive in. The Mt. Gox event in February 2014 was the most pivotal and important event in Bitcoin history, because this is when my guest today, Ryan Selkis, aka the 2-Bit Idiot, released a document showing that Mt. Gox was bankrupt by 750,000 Bitcoin. This was almost a double-digit percentage of the whole supply of Bitcoin at the time. But like everything else in life, good things come from bad ones. And as we know, soon after Mt. Gox collapsed, and we thought this was the end of Bitcoin. I mean, I thought this was over. I was ready to move on. I was under house arrest, and I said to myself, okay, I'm just going to go to jail now, and then I'll do something else when I get out. Bitcoin's over. That's how big of a deal this was. But until this episode, Ryan had never shared the full story. This is the first time he did, and I'm so honored that he chose Untold Stories to talk about what exactly went down on that fateful night. Crazy, crazy stuff. We talked about how one of the projects that I founded, the Bitcoin Foundation in 2012, ended up becoming Coin Center. Well, out of the ashes of the Bitcoin Foundation, Coin Center was created. And there were so many other good things and good stories. Ryan is the co-founder and CEO of Messari, huge company in the space, providing constant data and pushing for disclosure and transparency. He was also one of the founders of the digital currency group that invests in hundreds of Bitcoin and crypto companies, founded with Ryan by Barry Silbert going back 7-8 years ago. And he was the managing director at Coindesk. So there was one of the founders of the Consensus conference that everyone goes to once a year in New York. I think it's the springtime or whatever. So you can imagine that this episode was chock full of historical tidbits that you guys are going to love. So as I always say, give some love to the sponsors. We got Ryan Selkis on the show. Super amazing, brilliant, brilliant gentleman. And I'll talk to you guys right after the ads. If you're buying, selling, or holding crypto, you are a low-hanging fruit for the IRS. And for many years, I've been waiting for a good solution where I can be proactive in my taxes, but more importantly, to sleep at night. Before the IRS picks you for an examination, subscribe to our newest sponsor, Crypto Tax Audit. Crypto Tax Audit is an audit protection service designed for the needs of the crypto trader. That's you, me, and really everyone else. It acts like an insurance policy. Subscribers will get detailed instructions on how to prepare a great crypto tax return by yourself, including preparing the required anti-money laundering forms. If the IRS examines your crypto reporting on your tax return, the experts at Crypto Tax Audit will provide all the IRS representation and tax law research at no charge. The statute of limitations on a crypto tax return is 6 years. Crypto Tax Audit covers you regardless of what year the IRS examines, all for a low price of $97. Best of all, you can sleep well knowing that the best crypto tax gurus are ready to defend you. Crypto Tax Audit is a service of the Donnelly Tax Law. All new subscribers of Crypto Tax Audit will get a copy of the latest ebook, Does My Crypto Tax Returns Need Surgery? It's a phenomenal book. You get it as soon as you sign up. It's a short but super, super powerful book. While other services are reactive, Crypto Tax Audit are proactive and give you the tools like their Crypto Tax Health Check so you can reduce your chances of getting an IRS letter in the first place. No one likes that certified letter from the IRS. Donnelly Tax Law specializes in complex crypto tax return preparation. No situation is too complex for them. So check them out at cryptotaxaudit.com. And listen, guys, start defending yourself today. You're a super loyal podcast listener, and you've been listening to my show for a while. So you know that Bitpanda, which is a company based out of Austria, has been working with me for a few months now. And I'm a huge fan of Vienna, and I'm a huge fan of Bitpanda. Let me tell you a little bit about them. Bitpanda is the leading European platform for investing in digital assets. Their core product is an easy-to-use crypto on-ramp and digital asset broker. They have over 1 million users, so you know they really care about their customers. What's amazing about Bitpanda is really how easy it is to set up an account and get going. They recently launched their own educational platform, and this is super cool, so check it out. Take a listen for a second, where you can learn all about Bitcoin and more. It's free, regularly updated, and you can earn €5 for free when you complete the quiz. So make sure you check it out, bitpanda.com. They are a big sponsor of ours, and please give them some love because they love me. Untold Stories wouldn't be here without the amazing production company Blockworks Group. A few months ago, I approached Blockworks Group and I said, hey guys, I want to do a show, Untold Stories. Can we make it happen? And these guys are the only event and podcast production company that I trust. Really, the show is powered by them, and it wouldn't be here today without the amazing work of the Blockworks Group team. So for access to all the premier digital asset conferences and to check out their other podcasts in their network that they produce, check them out at blockworksgroup.io. That's blockworksgroup.io. I promise you will not be disappointed. Ryan, thank you so much for coming on the show today.
It's been too long. Good to hear from you, man.
It's been very long. And I was just, when I get prepared for the show, I kind of go back and say to myself, like, do I know this person before? Do I not? And if I know the person, I go back and I try to figure out when was the first time I communicated with that person? How did we even meet? And I don't know how we met. All I see is that I started following you around the time that I was spending a lot of time, I was on house arrest actually. And I started following you in 2014. And you even let me do a guest post. So thank you for that. And it was really cool to see. I was reading a lot of your early newsletters, and I don't know if you do this, but I kind of implore some of your diehard fans to go back and see your progression. It's really cool, and the stuff that you write about is almost like content for the show. So now I can go back and see what was going on every day during 2014, 2015, 2016, because you were putting out these newsletters. But that wasn't your first foray into the crypto space, into the Bitcoin space. Well, really the word crypto didn't really exist back then. How did you first, I know I hate this question, by the way, and I never really like to ask it, but what was your first foray into our fledgling Bitcoin space at the time? And then I definitely want to get into some of them more later on, but when did you first hear about it, get into it?
Well, it's an important question for this episode in particular, if we're going to talk about Mt. Gox, because the obvious question is, how the fuck did you break this story half a world away when you didn't really know anyone, you were just getting started, and these documents just kind of fell into my lap as a solo artist, not really representing any larger media brand or editorial desk. So I first heard of Bitcoin in mid 2011. I'm not technical, so I wrote it off pretty instantly, but it was part of a macro trade that I was making to short the dollar, buy gold, and ignore Bitcoin, which was basically the only way that you could possibly fail in trading the S&P's downgrade of the U.S. debt. I went over 3, but I had the right thesis, which is what helped me keep track of Bitcoin through 2013. And at the time, I was winding down a startup of mine, and kind of in between, I had a 10-month period where I was in between whether I'd go to business school or do something else, and shut my startup down Halloween weekend of 2013. I had bought a little Bitcoin late summer, early fall, and kind of doubled down and started taking it seriously once the Fed shut down Silk Road. And it was obvious that this wasn't just going to be for child pornographers and terrorists, and actually there was some legitimacy, and you could actually catch people that were doing, conducting illicit activity. And I just started writing on a daily basis because I didn't really see many good synopses for investors. Coindesk was really, really early. They launched in April of that year, but the primary source of information at the time was our Bitcoin and Coindesk.
But were people investing in Bitcoin? I guess until I started reading your papers, I didn't think people actually were buying Bitcoin as an investment. Almost
well, this was the fall of 2013, which was the first really mainstream mega rally to 1,000, right? And that's when Coinbase had raised money earlier in the year from Fred Wilson, and then they ended up doing a follow-on Series B with Andreessen for $25 million, when the price just jackknifed up to 1,000 and then back down rather quickly. So this was the November, December timeframe, and actually my first post ever, not including friends that I was just emailing and had an ongoing thread with in early November, was November 19th. That's when I set up the Tumblr and the pseudonym the two-bit idiot was born on Twitter and our Bitcoin and and other environments.
A lot of the guests that we have on the show will tell me that the best time to get into Bitcoin and to crypto is during a bear market, and you literally started at like that day may have been that top of that rally. Like I remember December 2013, November, it was my birthday, it was Christmas time. That was the top.
Remember, I bought a little bit earlier that fall. So for me, being in between startup and business school, I went down the rabbit hole just for practical reasons. Should I buy more of this? Should I sell what I just earned 6x in a matter of weeks? Or should I just hold and kind of ride this thing out? So, I ended up just doing this for self-preservation and for speculative reasons, because I'd made a decent amount of money in a very short amount of time. And I didn't know whether to just cash in that lottery ticket or keep going. And as many people will tell you, if they get sucked into the rabbit hole, they don't really come out. and that was certainly the camp that I fell into, which is why I started writing about it. So there's a delta between, I didn't get in at the top from an investment standpoint, but I did start writing about it the week before things really started to go crazy. I mean, I started writing about it when it was in the 200s, and it went all the way up to 1,000, 1,100 before settling back down into the 800s range for the end of the year that year.
I spent a lot of time, reading your writings the past week, and a lot of the general themes you stay very consistent. What's cool to see is how you evolve. One of the things that you talked about very early, like when I mean 2013, you would tweet about and write about your holdings, Bitcoin, Ethereum. I remember when the Mt. Gox thing happened, and we'll get into that later, but you even said, I'm selling all my Bitcoin right now because you couldn't morally hold on to something that you're a good investor, and you felt that this was, and we all did actually, the Mt. Gox situation was an existential threat to Bitcoin. But going back to the other point I was trying to make, that general theme of disclosure, you've constantly kept, and it's been a constant, but without using the word disclosure. And Ryan, I'm starting to see this word being thrown around constantly, and I feel like it's going to be one of the words of 2020, and it's going to apply a lot to all companies, individuals in our space, and it's going to be disclosure. And how many times do I see you tweeting to various token holder ICO CEOs or companies or whatever, saying, why don't you disclose? You need better disclosure. Any information of data that you don't have, how can someone blame you for having not all the right information about something when they're not disclosing all that information? Do you think that this will become a general theme in 2020? And is that something that we need, for a positive industry?
I don't think many people in the industry argue against transparency and disclosure. The question is, how do you organize this information, and how do you create some type of teeth around compliance for disclosures? It's easy to disclose things when it's marketing language, when things are going well, and there's nothing but sunshine and rainbows to report.
Yeah.
It becomes a whole lot more difficult to do in any systematic way. It becomes much more difficult to do when you don't know where this information should even live, because there is nothing like an Edgar database. There is nothing like generally accepted accounting principles or the concept of audits. People are starting to talk about these things. I think most major players know that it's important, but it's a matter of how this is executed and what the form factor is that people can actually digest this information. Because the problem in crypto is not information access, it's synthesized and clean data and information, and standardized information. I think that's where we've tried to spend our time and energy as a company, and that manifests itself through our products. Now, having said that, disclosures is just one element of what we're doing at Messari. I think in order to have a healthy information market and reliable education tools and compliance tools for the next, or first billion users of crypto, you need that type of standardization, and someone needs to lay that foundation and do that grunt work. But it's not for lack of inherent transparency on the part of most of these projects or exchanges. I think it's more structural than that, and that's why we spent time and energy, going down this rabbit hole.
What I think will happen is companies like yours and others will start to require just certain types of disclosures and certain types of transparency, like holdings and things like that, for various projects, companies, et cetera. And if they don't meet the standards, then they won't be able to participate in whether it's conferences or being listed in certain databases online, Messari included. And I think that this is a market created solution. I mean, that's what kind of I hope to see happen and what we've been seeing happen over time.
Yeah, I think that's right. And we've said from day one that a lot of the information we're collecting should be free and open. We're just the initial maintainers of that system and the ones that are aiming to set some of these standards. I'll tell you right now, it's certainly not the path to a $1 billion company. So from just a fiduciary standpoint, this is a means to an end for us. But we think in general, some of the information that we have access to that we're trying to make more widely known and discoverable is not something that you build a business moat around, or that is necessarily that insightful. It's having clean data on which to build tools and services that will help people make sense of the information that becomes very valuable.
In that work, too.
Yeah, of course.
Products and services that work. Well, we laugh about it now, but I mean, let's go back 2 years ago when we had shit that didn't work. That whole bull market that you're talking about, 2013, even Coinbase went down. Coinbase went down the second bull market. Coinbase still went down the other day. Like, I mean, we still have products and services that don't fully work. But let's use my terrible transition and segue and talk about the ultimate product and service that didn't actually work. And you know what I'm talking about. So to preface this for everyone who's listening, at the time, we're talking about the earliest, one of the first bull markets that we had in our industry. The price was going to $1,200, and Mt. Gox had an insane market share. What was the market share of Mt. Gox at the time in that year, 2013?
2013, it got up to 80% of trading volume.
80% trading volume.
Yep.
And we would almost like joke as friends, like friends of mine, we would talk and we would say amongst ourselves, like, if Mt. Gox disappeared, if Mark did an exit scam, Bitcoin would be over. And so as I think because people knew that this was so important and Mt. Gox was so important to our industry, it was like the pillar of our industry, that as withdrawal problems were going on and people weren't getting their Bitcoin, weren't getting their money, because of all this was happening, we dug in. Myself included. Look at all the people on Twitter today that we're talking about. We dug in, and we actually, I remember when you first came out, a lot of people were hounding you negatively. Like if I were you, I would have cried. It was crazy. But what you did was such an important service. I want to let you tell the story. Can you start from the beginning?
Well, it depends on where your definition of the beginning is. Like I said, I started writing full time in November of that year, and just to set the stage, Mt. Gox, to your point, had already become a bit of a joke. They had mismanagement issues in the past. They'd had crashes and security breaches in the past. It wasn't until 2013, that late 2013 in particular, that some of these issues really started to become obvious. They had issues with FinCEN and dollar deposits. In middle of the year, they had a suit and countersuit with CoinLab, one of the major U.S.-based companies, which Mark Karpellis
still do, aren't they?
Still do, I believe. Yeah, and Mark Karpellis.
What does CoinLab even do? What does Peter Vesnes do or did? No one even knows.
Well, I don't really think the company ever took off. It was ostensibly going to be an incubator of sorts, and one of the deals that they allegedly had, I guess, with Mt. Gox was to create a Western alternative to Mt. Gox, leveraging some of their tech and systems. But it was it's like a dumb JV, because I was involved in that, because at the time BitInstant was the largest wirer. Is that even a word? Wirer? Wirer from the US to Mt. Gox. We were. Mm-hmm. So one of the reason that was all going down was so I would start wiring money to CoinLab as opposed to Mt. Gox directly. And I don't know what was going through Mark's head at the time. Maybe he was trying to use it to offshoot some of the liability or whatever, because he knew that a lot of Bitcoin was missing. But
what had happened was like when they, and I know we're digressing, but when they had forged that relationship, the CoinLab and Mt. Gox thing, I remember getting an email from Mark saying, all right, now you're going to wire money. And we were wiring like $600K a week type of thing to buy Bitcoin on behalf of our customers. I remember Mark saying, all right, you're going to be wiring money to CoinLab now. And so the next day I wired money to CoinLab thinking that it would be, this is awesome. I wire money in and out of San Francisco. The money gets credited to BitInstant's Mt. Gox account. Wonderful. Never happened. They were fighting from day one. So Mark wasn't approving and so BitInstant started going through this crazy liquidity crunch, which ended up leading into BitInstant's demise because we couldn't service our customers. We had a lot of complaints. We had two customers tried to sue me. I ended up paying them out of my own pocket. It was just a clusterfuck. But I mean, these were the deals that were going on in those years. And I like talking about them because we have to learn to make sure that we have to be adults for the future. But I took it away from you. Let me go back. You go back to where you were at with CoinLab.
Well, first of all, I think that's right. Second of all, I think it's to be expected, right? Remember Mt. Gox started as Magic the Gathering online exchange. And when it first started trading Bitcoin in 2010, the Bitcoin economy hit a $1 million market cap, right? And this is late 2010. So this was a novelty item. It wasn't structured to be a financial services enterprise and multinational conglomerate, something akin to like a JP Morgan for crypto. It was naturally going to be the tinkerers and misfits that were building some of the early applications. Some, like Coinbase, ultimately ended up making it through because they had a very professional founding team and they were savvy about the people they hired. Others have fallen by the wayside. I think that's probably repeatable in pretty much any emerging industry. But what the reason I brought up CoinLab is just kind of one puzzle piece of many in 2013 where things, Mt. Gox started to show signs of weakness. And, if you remember late that year, the price volatility on Mt. Gox was, 50% higher than it was on some of the other exchanges.
Yeah, there was a crazy premium.
And, BTC China had, I think, reported volumes at least that started to rival Mt. Gox. And of course, we know what's going on with even to this day, inflated volumes coming out of Chinese exchanges and some of the Korean exchanges. But still, between BTC China, Bitstamp, and a couple of others, Mt. Gox market share started to decline from 80% and kind of steadily ticked down. So this kind of coincides with my entry to the industry. So when I first started writing and thinking about services in the industry, I kind of laughed at and learned to laugh at Mt. Gox along with everybody else. Like, clearly this is a company that's on its way out and on its way under because now the big boys are here. And like the professionals will kind of take things from here. That was kind of always in the back of my mind as one of my starting assumptions. And it was pretty easy to track at that time because there's only, you could have fit the 50 or so venture-backed entrepreneurs in the same room back then.
Was there that many? 50?
Being generous, yeah. It's probably closer to 20. I remember going out to SF and visiting Coinbase when they were 5, and it just hired Adam White as number 6. And I joke with Adam that he took my job because I'm not technical.
I remember Adam. He was he helped me out a lot too. Nice guy.
He's still around. He's the COO at Back now, so he hasn't gone anywhere. But just to give people a sense of kind of perspective and scale. But I got to know people pretty quickly. A, because it was small, and I went to some of the major conferences in Vegas and Miami around that time, and B, because I had this newsletter, and there was kind of a dearth of quality curation and information at the time. So I ended up getting connected with a group that was operating a listserv called XGBTC, which is more or less a Silicon Valley insiders list. Email listserv that had kind of the who's who.
It's still kicking.
Yeah,
I haven't seen an email in a while though.
Yeah, I know the group's still alive. I haven't seen much in a while. But when I say it was the who's who, it's pretty much all the folks that you would think of, as kind of early pioneers in the industry. You and I were on it. Barry and Bobby Cho from DCG, then Second Market, were on it. You had, Wences, you had the
Eric
blockchain
was on
guys,
it.
Eric Voorhees, the Coinbase guys. It was started by Ben Davenport, I believe, maybe with one or two other folks, who was the former CTO at BitGo. So there was a lot of firepower on this list. A bunch of the early, Silicon Valley-based investors and VCs as well. And through those relationships and through some of my writing, I ended up getting connected with Coindesk. Began working as an op-ed contributor for them. No strings attached, just a contractor. But enough people were starting to read and rely on my daily note and engage with me on an ongoing basis that I started asking some questions about Mt. Gox in February. By the way, along with Coindesk, who in early February of 2014 commissioned a survey to get a temperature check of Mt. Gox customers, and actually found something like 70% of customers were experiencing multi-month withdrawal delays.
Hey, Ryan,
Mm-hmm.
why did you write with a pseudonym back then? And when did that change?
I started writing with a pseudonym basically from day one, because I had been warned by friends and some of the non-crypto folks that I was writing for initially, being some of my investor friends from my first couple of jobs. I said, just in case this thing ends up getting blacklisted or banned by the U.S. government, or you end up getting caught up with the wrong people, you might want to not write under your real name or create some pseudonym. And I just kind of spitballed and came up.
Pretty good advice, actually.
It was, yeah. I think it didn't last, right? Mostly because people were meeting me in person. And the list grew up, and then once the Mt. Gox story broke, all hell broke loose, and people knew exactly who I was. But it was kind of good for early access and early unfiltered, opinionated writing, even though I didn't really know what I was talking about at the time. And enough people liked it that they wanted to figure out who I was in person. I'd written one piece on Coinbase, and Brian Armstrong had DM'd me on Reddit and said, "Hey, you seem to know a lot. Like, were you at the meetup the other night, or who are you?" And kind of similar conversations like that happened throughout the course of those first couple months. And actually, as a result of that, in late February, when on the XGBTC list, rumors were circulating about what the hell's going on with Mt. Gox, came to learn that a few different parties were being approached for essentially a bailout. And this was ultimately how the quote unquote crisis strategy draft document ultimately was surfaced. And this was a private.
Remind us. So when these companies were being approached by a bailout, what was the narrative that was being said about Mt. Gox? Whether it was people speculating or coming from an inside source or whatever before the document was released. What was like the worst case scenario that we would think is actually wrong with Mt. Gox?
Before this, I think people believe that it was mismanagement, and they might be having, they might have been hacked, or they might have had some issue that was holding them up. It could have been regulatory driven from someone like FinCEN. It could have been a minor hack from like the hot wallet, something like that. But everyone
felt that Mt. Gox was on shaky ground. And so, having the Silicon Valley types or the real VCs, someone to really run it the right way, that was a great idea, to be honest. It still is. Well, it's too late now.
Yeah. I think it was more dire than that, right? This was not a case where Mark and his team had reached out to Silicon Valley investors and said, "Hey, it's time to professionalize this business." And what this crisis strategy document had laid out, which is commissioned by a consulting firm that I think Mark and his team had engaged to help them figure out this mess. It reads like a pretty panicky document, and it kind of lays it out in black and white terms for the folks that they circulated it to. Mt. Gox customers have been affected by major withdrawal issues that have compounded. our workarounds have not been effective. At this point, we're 750,000 Bitcoin short. The cold storage is wiped out, and they say, and I quote, at the risk of appearing hyperbolic, this could be the end of Bitcoin, at least for most of the public. The likely consequences of something like this would be much larger than localized financial damage, and we think the benefits of keeping Mt. Gox stable and running outweigh the risks. This is,
these were dire words.
Yeah, and this is what they're presenting to investors, right? So they went to the insiders and they said that, look, we fucked up, but really it's not about us. We know that we're going to have to change the management team. We know that we're going to have to change and swap out a lot of our infrastructure. But you're talking about a bailout of Bitcoin now, not necessarily Mt. Gox. And what they were essentially proposing was that Mt. Gox go fractional if they had a capital infusion, and then work to make it back. How exactly was unclear, but this wouldn't, this ultimately was exactly what Bitfinex did years later, when they offered, investors access and direct investment in Bitfinex in order to keep it afloat, and bail in based on a hack that they'd experienced in mid-2015. So this is essentially what Mt. Gox was going to follow as a playbook as well.
I'm trying to see how many Bitcoin were in circulation back then. I think it was around like 10 or 11 million. And so you have almost like 10% of the whole supply here in Mt. Gox. Like not that high, maybe like 6 or 7, but still like an insane number. How did you get this document, and then what were the first perceptions? How did you just take us in your mind? Like I want to feel like I was in your shoes and take me back to like an hour before the document. You got this document, and tell me like your thought process before. What were you doing? What happened when you got it? Your first reactions? Who did you talk to? Did you talk to anyone? I mean, this was like almost, this will go down, and it's a stupid analogy, but this will go down as like almost like, on the levels of Snowden. I mean, even things like Nixon type things. Like this was no joke. So walk us through like those moments. What were you feeling?
I think that's a little hyperbolic.
I get excited on this show.
Yeah. It was the equivalent of that, but for, small fish in a small pond, I guess at the time, obviously.
For now, though.
Yeah. If it happened now, it would be, much bigger. I've basically spent 6 years keeping that source a secret, but he finally gave me permission to kind of tell the full story, which is why I came on the podcast. So I get a call. This is probably mid-afternoon in February. I'm living in Boston at the time. I get an email or a text, I can't remember which, from Ben Davenport, who was the BitGo CTO. And at the time, he wasn't yet at BitGo. He was still, I think, winding down from Facebook. He'd sold a company to Facebook, and was the ex-GBTC founder. So he was very in the weeds as an investor, angel investor in the Silicon Valley Bitcoin scene. But he said, "Hey, you have a minute? We kind of have to talk, and I think you might be interested in this. There's maybe a big story here." And I was out walking my dog and got on the phone with him. And he said, "I don't really know how to say this, but Mt. Gox is short about 750,000 Bitcoins, which at the time was about $500 million, just a shade under $500 million. And, my first reaction was, well, they're incompetent, but they're not that fucking incompetent. Like, how can you be so sure?" And he said, "Well, there's this document, circulating around. I'll send it to you. Keep my name out of this. But it's not just us that have gotten it. I'm sure you'll be able to authenticate this pretty quickly, because, they're looking for a bailout, essentially." So you can imagine the who's who that was getting this. I'd reached out to a few folks that kind of gave me non-answer answers that were good enough. And I ended up realizing as I went through this document that Mt. Gox was planning an announcement for the next morning, which really wasn't the next morning. It was like 6 hours in local time terms. So I had about an hour to make a decision as to whether to publish this document as is, or kind of sit on it until I could verify it, at which time, Mt. Gox would have proactively gone dark and said, "Hey, we're suspending trading for a couple of weeks for XYZ reasons until we figure out this transaction malleability issue."
But what you did was you allowed the community to take back that narrative, and that's what was so important. What you did, because if you didn't do that, we could talk about what would have happened. Where would we be now? But if you had not done that, and Mt. Gox was allowed with their PR company and their lawyers to put out their own statement and continue controlling, who knows if more money would have been lost? Who knows if things would have worked out the way they did now? I mean, with civil forfeiture, with civil rehabilitation or whatever, who knows if that would have happened? So you gave that narrative back. I mean, and you almost could say, and I would go out on a limb and say this, and someone can argue with me, I don't care. By that time, Mt. Gox was a utility. It was a public utility for Bitcoin. And so it's almost like you were doing that service, not for for us as a, like you weren't like whistleblowing or whatever, a private company. It's as if you came out and you found that, you had evidence that a major institution or a major public utility or something that we rely on as humans was bankrupt or whatever. That's how I look at this.
I mean, I don't think it's too far from the market. You kind of mentioned, I sold my Bitcoin on Coinbase, and partly it was the thesis has changed. But there was another pretty meaningful part here, which was I knew that I was going to be in the thick of things for the next, 48, 72 hours. And I didn't want to be like day trading information because I felt like even though this was an unregulated asset, if I was trading this, then I could go to jail. I didn't know exactly how. I didn't have legal counsel. Like I said, I was writing this from my kitchen table at midnight and 1 o'clock and 3 o'clock in the morning for a couple 2-3 back-to-back nights. So I basically made the decision. I'm just going to sell out, and then I can always repurchase if I need to. But for right now, I'm going to sit on the sidelines for a while.
It ended up being a good price to sell at too, though.
Well, yes and no. I mean, it ended up bouncing back rather quickly, and it actually got it rallied for the few months after the initial expose. Of
the
course,
longer term.
It ended up declining again, but we can argue whether you should ever try to time the market. But it was less about the trade and more about just having one element of my bandwidth back, so I don't have to worry about my personal coffers or averaging in or trying to be simultaneously a quasi journalist and a trader at once. I'm sure it could have been profitable, but like I said, I was in legal gray area, but the general ethics of it were kind of a no-brainer. I figured if I was going to have any long-term future in the industry, being the guy that broke the story and then was insider trading, it was not a good way to start. So I think it was wild to see everybody come out of the woodwork and immediately start working to confirm this. And obviously, you were one of the folks that I spoke with that first night. And
I remember that. Yes, we spoke.
So to answer, well, not only did we spoke, but you were on, I think, IRC chat with Mark, basically saying like, "What the fuck, man? Is this legit?" And he was. I
have to find those chats. I remember. Yeah, I think he even admitted that it was real.
Yeah, he did. I was on the phone with you, but you were giving me a play-by-play because he wouldn't speak to me. And
could you believe that I was like, I can't believe that Mark did just ignore people all those times and then would just easily get on an IRC with me. I could tell you crazy stories about that, but anyways, continue. Sorry.
Well, it's probably because you guys had a pretty close business relationship. I don't know what the personal relationship was, but it seemed like there was a few people that he could actually talk to at the time. But at the point that this broke, there wasn't really hiding anything. Like the document was out there; it was going to get authenticated one way or the other because it was true, and they knew that they were going to be shutting down operations for at least a couple of weeks anyway. They didn't come out with a statement for a while, but they did delete all of their tweets and a couple of other things that kind of raised red flags across the industry, where people said something's not right here. And more or less, when they deleted their tweets, people knew that they were covering their ass for some legal reason beyond just, hey, we've got a technical issue.
That's that can't. They went back and deleted all the tweets and everything. But now now you see what I meant earlier was that controlling that narrative, and that's why it was so important to have done that. Are you worried about that dreadful certified letter from the IRS? Are you worried about the IRS auditing your crypto returns? Then you need Crypto Tax Audit. They provide IRS audit defense designed for the crypto owner. Subscribers will get detailed instructions on how to prepare a great crypto tax return by yourself, including preparing the required anti-laundering forms. Subscribe today at CryptoTaxAudit.com for $97. That's CryptoTaxAudit.com. And I want to talk about Bitpanda for a second. I mentioned at the beginning of the show that we're working with them, and we have been for a few months now. They love me, and I love them, so I'm asking that you give them some love and some support, especially if you're listening from Europe. Bitpanda is the leading European platform for investing in digital assets. It doesn't hurt. Actually, it helps that they're based out of Austria, which is one of my favorite countries in the world, and Vienna is one of my favorite cities in the world to visit. I try to go as frequently as I can, and meeting up with the Bitpanda team is always a pleasure. I really like Bitpanda's approach. Why? Well, basically, what they're doing is to apply the same tech that we're used to from Bitcoin and apply it to other digitized assets. And I'll explain why. And if you check out their website, you'll understand how that actually works. Because they're really pushing hard for bringing crypto to the masses and educate people on the topic. Unlike other companies that just want to really give love to their customers, Bitpanda is giving love and spending money on mass adoption, just bringing more people into Bitcoin. With their recently launched educational platform, it's not only free, it's called Bitpanda Academy. It's not only free, but you'll actually learn and you'll earn €5 just for taking quizzes on their site. So it's a great way to force you to learn more about Bitcoin. Check them out. Again, they give me love, so I'm asking for you, my listeners, to give them some love. Going back to that tweet in 2014, so just to read your tweet, you wrote, "I hope this isn't true, but I received a report allegedly from Mt. Gox. They had lost 750,000 Bitcoin." A journalist wouldn't have written, "I hope this isn't true," because it would show bias. Did you write those words carefully? Did you consider yourself a journalist back then?
No. I mean, I wrote them carefully, but the accident of history in creating this two-bit idiot pseudonym is I was able to write a little bit more authentically and without the same rules and constructs of someone that goes through journalism school. I could push the envelope a little bit, and ultimately just use discretion on when to be opinionated and when to report just the facts and when to intersplice fact and commentary. And it turns out people thought that was generally thought that was pretty valuable. I think that's still true today. I mean, if you think about some of the top media outlets, just generally speaking, people want to hear from Joe Rogan. They don't want to hear from CNN anymore. In sports, who's the fullback for? I'm blanking on his name, but the guy from Fox who's buddies with all of the players. He gets the inside.
Oh, yes. I know you're talking about.
Jay Glazer. Yeah.
Yes.
So I think there's some real value in that. Look, I'm not going to let you blow smoke up my ass, but at the same time, if it's not important, I'm not going to scoop you. I'm not going to write a fucking tell-all, right? I'm not going to be that douchebag in 10 years that says, here's what I heard, this particular event and blah, 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 and kind of digs up dirt on everybody. If I ever write a book, it'll be funny, it'll be honest, but I'm not gonna sandbag people and be one of those guys. So I think that's more or less shown through in most of the decisions I've made, writing day to day, is do no harm to the individuals, unless it's some instance of outright fraud or potential fraud, which I have no problem with, right? So I think that has been, will continue to be, an important personal mantra for me when I think about writing and analyzing the industry. But it also doesn't come with the same shackles or, quite frankly, conflicts of interest that traditional journalism comes with, right? Well,
so let's talk about that. So in February 2014, this all came out. At this point now, it's its own animal, it's its own beast. It's moved on. It's moved on from you breaking the story. The way what I see was that at that point was the birth of Ryan Selkis, and it was almost like taking Two Bit Idiot as your, like what you would your moniker or whatever pseudonym, kind of putting that on the back burner. And what I mean by that is if your story had ended there, like if you're out there doing something else and whatever, I would still have you on the show because that was so important. But the Ryan Selkis life would be another great episode that where we wouldn't even have to talk about the Mt. Gox, saga. So that was like the birth of Ryan Selkis, and as a crypto entrepreneur, as a Bitcoin entrepreneur. You ended up as your third company. You ended up becoming the managing director at Coindesk, and you were one of the founders of the Digital Currency Group, which is the biggest VC fund, like one of the most important companies in our industry today. And then you ended up founding Messari. So how did you like segue away from like Two Bit Idiot into, hey, I'm Ryan Selkis, you're meeting Barry, who's also a very brilliant person, founding DCGO? Like, how did that all kind of come about? Because it's kind of like, it's like almost like two different people. Wouldn't you agree? It's like one is one story with one name, and then now you were born again in that way.
Well, I think this is where the split between public and private perception is on this particular issue. I had gotten to know most of these entrepreneurs and gotten them to feel like they knew me, maybe even more than I knew them, because they were reading on a daily basis. Like Barry was a power reader. I remember after I started at DCG, when we were cleaning out one of the offices, and I saw, a dozen or so of my printed out blogs that you clearly had as assistant print out from like months prior, depending on what the subject was, and I think that was true for a number of entrepreneurs, investors in the early ecosystem and my early subscriber base, especially. Not because I was world-class analyst or anything like that, but there was very few people that were just doing what I was doing and curating the day-to-day noise that was coming from the industry. So that's more or less stayed consistent. But for that interim period between breaking the Mt. Gox story and then joining DCG, it was about 8.5 months. And remember, it was more or less a slow and steady decline down from the highs of 1,000 in late 2013 through the end of 2014. Right, so there was the Mt. Gox issue. The price rebounded for a few months and then started tanking again over the summer. And by the time early 2015 rolled around, it breached $200 again. So there were no one was fucking hiring at that point. It didn't matter if people liked me or didn't like me. The companies that were hiring didn't have a whole lot of money, number one. Number two, when they were hiring engineers, or they were hiring specialists with bona fides that I'd never be able to compete with, right? So you're looking for a general counsel, or you're looking for a head of compliance, or you're looking for an enterprise salesperson, things like that. So when I first met Barry, he and I had spoken on the phone a couple of times, but when he and I first actually met in person, I don't believe we met prior to this, but we'd met over the summer, and within the first 10 minutes or so of the conversation, he said, I want to hire you. Here's what I'm thinking about building, blah, blah, blah. So it's pretty clear that because the industry was so small, that DCG was this, unique multi-product investment firm, that it would be a pretty good fit based on my background and some of the research that I was already doing. But I'd say, in terms of the transition from TBI to Ryan Selkis, even to this day, it's probably still a 50-50 split, right? I'll meet people in person and they'll say, wait, you're Two Bit Idiot, or, oh, I never realized that, you were this person. I always kind of disassociated the two. So I don't think that's really changed pre and post Mt. Gox. And even to this day, people that don't know the history, I think, still find that a little bit jarring or surprising when they see me online versus, see me affiliated with Messari versus see me in person.
Yeah.
Fine. I'm hiding in plain sight, I suppose.
Yeah. So you developed a lot of different theories and theses, and you've developed, a lot of really good and newer writings, and now what I really like is you start to call out different projects on whether it's like transparency or things like that, and so that's gotten really, really good, especially under Messari. How did you end up getting into Coindesk? I mean, like Coindesk has a very special place in the hearts of a lot of people who are involved very early on. You and myself included, because Coindesk was, I guess, the first real reporting medium. And I've covered Coindesk on this show a few times from a lot of different people, and everyone has a lot of really good things to say about it. And now Coindesk is going through another like wave of moving into the DCGO offices, and there's a lot of Pete left, and what did Coindesk look like when you joined, and why did you want to become a managing director there? Did you want to? Did you kind of feel like, what do I know about media?
Well, DCG was a small investor in Coindesk. And I had, under the DCG umbrella from day one, said to Barry, even dating back to that conversation I mentioned in August where we talked about working together, I said, my background is in investing, so I can immediately be helpful as you think about additional seed investments. You have to raise money. I can help you out with that, putting the materials together, doing all the fundraising meetings, and helping with that process. I can help you kind of rebuild the core team as it transitions from second market to DCG. And after the first year or so, I'm probably going to want to start a business under the DCG umbrella because of the structure of DCG as a holding company. They had Grayscale, the Bitcoin Investment Trust sponsor. They had Genesis Global Trading, which was the former second market trading desk, and a portfolio of both digital currencies and early stage venture bets that included BitPay and Coinbase and Zappo and Circle and others.
No one realizes that second market was actually one of the first OTC desks for our space.
Well, yeah, they were the OTC desk, and they were the creator of the Bitcoin Investment Trust, right? So, so this transition happened over the course of 18 months as kind of second market legacy spun out and sold to NASDAQ, and then DCG became the new parent company, focused on digital currency, obviously. But I had started to kick the tires right before we were fundraising on starting an event business, because the natural question was going to be, okay, you got Grayscale, you got Genesis, can you incubate and add additional properties in house? And I said to Barry, I think media, maybe not media, but research, information, and events is probably an area that we could clean up, because no one's really done a good event. If you look at Money 2020, they make ungodly profit margins. And us sitting in the center of this industry, we could throw a very good, lucrative event. Around the same time that we started those conversations, Coindesk announced that they were going to do an event, Consensus 2015, which was a small single-day event that was focused in New York. We knew, though, that they weren't doing that well financially. So this is kind of like a last gasp effort to kind of maintain themselves as a going concern. And at the same time, I'd recruited a professional events team from Money 2020 to help spin up an event brand under the DCG umbrella. And by the time late 2015 rolled around, we'd completed the fundraise, we'd rebuilt the core team at DCG, and Coindesk came up for sale following what had been a successful, but not successful enough, Consensus 2015 from a dollars and cents standpoint. So we decided to smash the editorial brand and kind of the marketing powerhouse that was Coindesk with the events team that I'd already recruited in-house. That was basically a 3-city merger of 3 different teams that all rolled into the same umbrella, and then by the time we acquired the business, we had 3.5 months to pull off the next Consensus conference in May, which was the
was that and Consensus became and is one of the largest events in the world for crypto. But was this the start of a transition from Coindesk into a solely like news website, like a Politico or a Huffington Post, into a I love how I just use the 2 worst ones as my analogies, but was this the transition into like what Coindesk became, and then is it related to the further transition of the very recent move that Coindesk is moving into DCG offices, and Pete leaving. Is that all kind of related as to what you see Coindesk should be or needs to become to be profitable?
Well, I can't comment on the financials of Coindesk or what they were.
Sure.
You can do a back of the napkin though. When I left, we had grown revenues in 18 months. 6-7 times, maybe a little bit more than that, from when we'd acquired it on an annualized basis. And that was before the 2018 monster of an event that they had, which I think pulled in close to they did like something like
that was the craziest event.
Yeah, they did something like 25 million in revenue in 2018, which was 40 to 50x from when we'd acquired it. So mission accomplished in terms of solidifying the Consensus brand. And events are highly profitable, right? So even in a down year like last year, I think they did all right. But one of the issues that we ran into in 2017 was very, very difficult to recruit engineers into Coindesk because the incentives didn't really work as a wholly owned subsidiary of DCG. So there wasn't really that much, equity capital or real skin.
Oh, I see what you're saying. Yeah,
offer to engineers, and
they weren't excited. It's hard. Yeah.
Well, I mean, around the time that I started to transition out was, Coin market cap just started completely crushing Coindesk on SEO because it coincided with the bull run in ICOs and other digital assets not named Bitcoin. Now, I think that was probably good for Coindesk to continue to stay away from some of the excesses of that market for sure. But when it came to understanding whether Coindesk would be a media and events business like TechCrunch or a data platform like Bloomberg, it was pretty clear it was going to be the former. And I left in mid-2017, took a couple months off, and pretty quickly decided that I wanted to build something that looked a little bit more like Bloomberg. So not straying too far from what we'd done at Coindesk, but maybe merging some of what I learned at Coindesk and some of what I've learned just as an independent analyst to focus on the emergence of what I thought was going to be a new asset class, even if most of the assets that we're trading were overvalued and some of which were just complete garbage. And I think we still believe that. But what's interesting about the state of the industry right now is things have settled down. Valuations, they seem reasonable in most cases because
it's better is what you're saying. It's not perfect, but it's better.
Well, it's better because my rubric would be can you look at some of these protocol tokens and compare them to similarly sized venture bets, infrastructure bets. And you look at some of the more interesting projects and their tokens are valued in the low double.
That's a very good point.
So I mean that's like a Series A company, Series B companies. It makes more sense. Now most of these are still going to fail, but on an ongoing basis, more and more of them are going to succeed, and you're going to start to see some really interesting killer apps. So I make the joke that Bloomberg had junk bonds, we have shit coins. neither of like the blue chip assets, but they're the starting point at least because they're the murkiest, they're the toughest to track, and ultimately they're where the information asymmetries are most rampant.
Who are your perfect customers for Messari? Who are you're attracting individuals like me, or you attracting companies? And what type of the products and services are you offering?
So our goal is to organize and contextualize all crypto information. Which is one way of saying that we're a crypto information aggregator, and that includes pulling markets data, on-blockchain data, key events data, and disclosures directly from projects, news, independent research, all into one cohesive searchable data library. And the way that we've thought about, and the end result of that, if we're hugely successful in 10, 15, 20 years, it looks something like Bloomberg, but for crypto, right?
But you're not amalgamating or aggregating that data from other sources. You're having to almost find it on your own and then transpose it into a readable format. And I'm not just talking about specific data. I'm talking about like there's just constant missing information. So now I can see data aggregators down the road getting the data from you.
Yeah, I mean that's the play, right? But if you think about how we've kind of structured our tech stack, We're very much an ingestion and output system, right? So an API-driven company. And from day one, everybody talks about building Bloomberg for crypto. I guarantee you, every single fucking data company in this industry has at some point or another told their investors or their customers or anyone that they're talking to that they're building a quote unquote Bloomberg for crypto. And this has happened since 2017 when all these assets proliferated. And that's fine. But what we said that was a little different was, well, we want to build a Bloomberg for crypto just like everybody else that's raising money for a data project right now. But we also recognize that before you can build Bloomberg, you need to be able to build just very basic analytics tools that a professional, can leverage and glean insights from. So things like screeners, things like charting tools, and alerts, right? Extremely remedial stuff. Before you can do that, you need something akin to Edgar, which is even less sexy, but some type of standardized disclosures format so that people could actually compare the different metrics that they're trying to evaluate on an apples to apples basis. And
what type of data?
The most interesting one is just circulating supply, right? So throughout 2017, coin market cap, you look at the market caps and you say like DentaCoin has a $5 billion valuation. Well, it doesn't make any sense on its face. People know that that's not legitimate. But if you just look at the traditional definition of circulating supply, right? What's price times outstanding supply, or price times fully diluted supply? All right, that kind of makes sense. But the issue was no one really knew how these tokens were being distributed when they were hitting the market. And what we said was, you're not going to know that by definition if some of the insiders that are distributing these tokens don't tell you what they're doing. And it's not clear and it's not laid out in black and white, and there's no high level disclosures. For public securities, you'd expect this in like a Form 4, or you'd expect an 8K around a material event. No such thing exists in crypto. I think for good reason, because most of these are not securities, at least not on an ongoing basis. They certainly don't look like securities. But you still need some common sense stakeholder communications and disclosures that are going to satisfy the regulators and make some of the worst elements of 2017 harder to conduct and harder to kind of hoodwink investors on. And so we created a rubric which more or less mirrors what we think a crypto asset 10K would look like, and try to work with teams on scrubbing that of marketing language and putting it in a consistent format so that people can compare these things.
Oh, so you're saying that future projects, tokens, security tokens, utilities, non-tokens, whatever it is, can come to you in advance, and you can help them work through make sure that all, their information is correct, that they're putting out the right content, but also the right numbers, and to work with you like on a transparent, almost like a self-regulatory body.
I'd call it a self-regulatory mechanism, right?
Mechanism.
So yeah, I mean, and the key distinction there is I'm never building a fucking SRO, right? Like,
I feel
there's been 2 in financial services that have been approved in 80 years.
FINRA, what's the other one?
FINRA 80 years ago, and then the National Futures Association, which is a row associated with commodities, right? So, and by the way, there are great, initiatives underway. The Winklevoss twins are kind of spearheading one, and I know there's a lot of interest in figuring.
Do you think we'd ever see one?
No, I think so. But, for us, we're going to be a data vendor to whoever ultimately, has that conversation. Because we've already done a lot of this work, right? So there's 2 ways to approach this. There's the exchange way, where you have hundreds of millions of dollars at your disposal, and you have the ability to be patient and play this long game and engage with the regulators over a multi-year, maybe even decade-long process. And then there's like us as a data startup, which is we're just going to go build this, get people to come with, and we can refine the model long-term if any local regulator wants to see information presented in a certain way from a project that's operating within their jurisdiction, or that has team members operating with their jurisdiction. But ultimately, we can accomplish that by getting the exchanges bought in, and the wallets, custodial wallets, and other key stakeholders bought in, to the point that they say, if you don't fill out this common application, we're not doing business with you.
That's exactly what I was talking about. Like things like that, where the market regulates itself, and the market forces that transparency.
Mm-hmm.
And so I think that would be really great. And it's so cool that we talk about this, because so many good things have come from negative ones. If we didn't have that Mt. Gox situation, we may not be talking today about the need for that transparency. Same thing with the 2017, ICO drama. So there's a lot of that. Good comes from bad. You look at the Bitcoin Foundation that had launched in 2012. I think we had launched it, which when Gavin and I had originally conceptualized the idea behind the foundation, it was completely different than what it became to be. But you told me something I didn't know, that Coin Center, which is so important, integral, based in DC for industry today, that kind of came out of the bad of the Bitcoin Foundation. And how did that happen? How did that transition happen? From your perspective, before I ask you that question, I want to preface it really quickly with how I viewed the foundation and how it all went down, and then kind of just very briefly, but basically the idea that I remember Gavin and I were sitting in a cafe in Vienna, and the idea was, I said, Gavin, I want to run a conference. And so this was like 2011, I think. And I said, Gavin, I want to run a conference. And Gavin said, well, I want to get paid as a developer. And that's literally how the foundation came to be. The foundation was going to be an industry group, an industry trade association. But back then in 2011, there wasn't a distinction between the overall Bitcoin community and then our industry as an industry. That didn't exist. There was no distinction. And then it became what it became. So I want to let you take it over from here.
Yes. So there's another untold story here, Charlie, which you'll like. And that is the degree to which I still wake up in cold sweats every now and then thinking about how badly I almost burned my entire career following Mt. Gox. So, this was obviously a high stress period, and I'd more or less doubled down and kind of refocused my attention after Mt. Gox to just basically trying to blow up the Bitcoin Foundation. And arguably it was very successful at that, because this was like the week or two following Mt. Gox. You start to look around at all of the tangled webs within the foundation, which is supposed to be this advocacy group. And Peter Vesnes and Mark Karpelis are two of the board members, right? They're suing each other. Mark just went bankrupt. I said what I had to say about Peter back.
Well, don't forget me too. I'm sitting there on house arrest, and I'm one of the board.
I wasn't going to. Like you were picked up and fucking thrown in jail and put under house arrest for evading money transfer laws and whatever. And Roger was early involved too. Like Roger's a great guy, but he's a convicted felon, right? So you just look at this like on the surface, right? This cast of characters, and the ones to me that were like the problems were Peter and John, right? Because who's watching the Watchmen, right? That you got these two fucking guys suing each other. So if the foundation knows something, which I don't know if they ultimately did or not. I had reason to believe that they did, and just either weren't willing or weren't able to kind of come forth with some of this information. Either way, it was like a pretty colossal fuck up from an advocacy group that was closely tied to Mt. Gox, that was totally asleep at the wheel, and didn't actually have any pre-knowledge of this, which I find very impossibly hard to believe. So, I'd more or less on my own accord put together a pretty powerful list of Silicon Valley VCs and some of the other entrepreneurs who were, basically taking my phone calls now because of the Mt. Gox documents, and put together a listserv, a miniaturized version of XGBTC, where the goal was to replace the Bitcoin Foundation, right?
Wow.
And I got some bad information. I
had stepped down like two months before this, and January 26th, I stepped down.
Yeah, and Mark resigned on the spot, right? After the allegations came out. So then the attention came down to John Matonis, who I think is he's harmless enough. He was probably caught in the crossfire. Probably shouldn't have gone as hard after him. And then Peter, who was at CoinLab, yeah. And the long and short of it is, I got bad information about forthcoming resignations from the Bitcoin Foundation. And it ended up kind of blowing up my face in a very public way in this email list that I put together, and someone had corrected me, and I said, this is like, you're calling me a liar, like this is bullshit. And long story short, it kind of imploded the entire conversation, which I recused myself from. And ultimately, some cooler heads prevailed and picked up the slack using that same kind of list of contacts. Ultimately, began to rally around Coin Center, because it was obvious that the Bitcoin Foundation was not going to be a very good messenger for the community anymore. So there are more than a couple of people that will say, you really fucked up on that one. But the silver lining is Coin Center did come out of some of those conversations. So but this was all behind closed doors. And I'm sure at some point some of my very embarrassing emails will leak. But
who cares though? But that's such an important story, because Coin Center today, I mean, when the U.S. government wants to do Senate hearings, or they want to get someone who, they want to ask questions about Bitcoin, about crypto, they're calling Coin Center. Coin Center is putting on these amazing events. They have that dinner that I'll never get invited to speak at. So yeah, I mean, but it's a great theme. And it's like, I mean, so many good things come out of so many bad things in this industry if we almost like allow them to happen. And Ryan, like, to give our industry some credit here, let's look at like just, the US crypto industry. We largely are where we are today without much government intervention. Like, our industry has been allowed to, and I know people complain about like you have FinCEN and FAFTA, and I cover that extensively, but let's be real here. Like, largely we've been left alone. I'm not back in jail. You're not, I mean, like, we're not, knock on wood, right?
I was never going to jail, Charlie.
The point is that our industry has been largely left to our own devices to do the things that we want to do, make our own mistakes, and then our industry has been able to like repair them and make good things come out of that. So I guess that's like, it's a really nice thing. It's a really good way to end, actually. But I'm happy with where we are today. I know a lot of people are not. People got burnt out, but I'm largely happy with where we are today, and I'm content.
Yeah, I agree. I think the MO that I try to develop is, if you're going to tear something down, rebuild a better version of it, right? So I think that happened with Mt. Gox. Bitstamp got funded a month later. I think that happened with my ill-fated war with the Bitcoin Foundation, which is ultimately effective and ultimately led to their diminished importance and Coin Center's rise. I think it was true for conferences. We picked up the slack at Coindesk and took the mantle a year after the final Bitcoin Foundation conference. And that tends to happen in an industry that's got as many moving parts and exciting opportunities as crypto. So you see the same archetypes every market cycle that emerge, and I don't know if you ever saw The Wire, right? The final montage from the series The Wire is basically just history repeating itself in Baltimore with all the same archetypes. The good cop, bad cop, renegade, gangster, and all that. I think the same is true for us, but hopefully each incremental version is one level up from where we started.
Ryan, how can people follow you on Twitter? I know they go to Messari.io. We'll have the information in the show notes, but what's the best way for people to sign up to read your newsletters, to follow you?
Yep, we are at Messari Crypto, Messari, Messari like Ferrari, crypto. And I am at 2-Bit Idiot, all spelled out. If you want to sign up for our newsletter or my podcast, Unqualified Opinions is sent daily as a newsletter, and we do 2 shows a week as well with other personalities. Have to have the very famous Charlie Shrem on at some point.
I need to come on the show as soon as possible. I'll be in New York in a few months, but the amazing emails that I get, that I enjoy reading them. How can my listeners sign up to that?
You can subscribe directly on the Messari homepage.
Perfect.
Just enter your email, sign up. It's free daily. We also have some pro tools for $30 a month for the slightly more hardcore that combine advanced analytics and research and some of the tools that we're building in-house. Ryan
Selkis, Messari.io. Thank you so much for coming on the show.
Thanks, Charlie. See you soon.
Hey everyone, thanks for listening. New episodes of Untold Stories are released every Tuesday and Thursday at 7 a.m. EST on untoldstories.com, Apple, Spotify, or wherever you get your podcasts. Untold Stories is produced by Jason Yanowitz, Michael Ippolito, Reed Hannaford, and Riley Silbert of Blockworks Group. Our account executives are Gina DeFelice and Julie Muroff. Our content is written by Kathy Zolo, Ronnie Tishner, and Scott Offord. Special thanks to Wayne Dallaire from Jump Dog Audio Productions. And of course, I'm your host, Charlie Shrem. You can follow me on Twitter at Charlie Shrem to continue the conversation. Send me some messages, feedback, or anything you want to say. And remember, please give some love to my sponsors, and I'll see you next week. Remember, strength in numbers, and information is power.